Welcome to Share Views, latest edition. I'm joined here by the Director of London South East, who is Scott Grant. How are you today, Scott?
Mustn't grumble, Zach.
Let's have a look at some slides that you brought in today. That's the home page. That's your landing page. Just talk us through this. I mean, what should, if somebody's just new to this, what should they be focusing on?
Well, I was actually going to pick up on one thing today. A couple of weeks ago, I actually spoke about our My Terminal tool, which is an investor tool. Today, I'll actually talk about something a little bit easier and straight away, as soon as you're into the site. About 95% of what we provide to the private investor is absolutely free of charge. So towards the top there, you'll see the login boxes. If you sign up for a free account with us, it can then open up other facilities to you. As you say, lots and lots of information there, snapshots, immediate visual cues as to how the FTSE is doing today. You can see the heat map there, the graph, the risers, fallers, most traded, most volume in share trading today. On the left-hand side, we've got our chat as well, most recent chat. So loads and loads of information. As I mentioned, if you actually open up a free account and log in, you'll then get hopefully to the next slide, which is coming our way. If you go into any particular share, so I've just picked three here for argument's sake, let's take the middle one there, which is Lloyd's. If you went into their share price page, you'll see a big red, what looks like a drawing pin next to the name of the share. If you click on that, it actually pins it to your home page. So you'll see down the left-hand side of the home page these shares, and you just get a real snapshot. Is it up today? Is it down today? You can toggle between pounds and percentage points. Just underneath where you've got your quick picks pinned to your home page, you've got a little blue thing there which actually says quick picks overview, the same as our slide title there. Clicking on that takes you into this page. And again, it's a very visual, immediate representation of where your shares are today. So as you can see, we've selected 6 items there which most private investors like to see straight away. You've got news, chat, RNS, any broker recommendations either way, directors' deals, and the trades in that share today. Again, pick 3 there to try and find a bit of activity. As you can see there, Sound Energy had an RNS that day. This particular screen is actually clickable as well. So for instance, if I wanted to look at that Sound Energy RNS, simply just click on that box there and it takes me across to that RNS to have a look at it. So as I said, very immediate snapshot of how your shares are doing today. So you don't have to look around too deeply. You've logged in, there you go. One more click.
The other thing is also to know what other traders are into, where the liquidity is, and maybe you're getting on the bandwagon of a decent move.
Absolutely, as you say, we've got the trades figures there. As Lloyd's, as you'd expect, lots and lots of trades. In terms of the sentiment, possibly is more to do with the chat. So if you look at, again, Sound Energy there, 786 chat posts.
People have completely gone mad, haven't they?
Absolutely, it's one of our most chatted about shares, and as you said, very interesting ball to read. Very interesting.
Okay, well let's move along. Not surprisingly, after that build-up, Sound Energy at the top of the pile there, Ascent Resources, which is, well, actually Ascent and Sirius, a couple of companies I really follow myself. And I think Cloud Tag was also one of the recent rises. But this just shows you what people are looking at, doesn't it?
Yeah, this again, I've taken just a snapshot of the homepage. So I'm not saying go back to the homepage, but if you were to look at the homepage again, where you had the volume, the most traded, it's all in the top right-hand corner, a little grey box, which this is one of those boxes. This gets updated once a week on a Monday, and as you can see towards the top there, it's actually most traded via our own trading facility, which is London South East Trading. We don't promote it heavily, so sometimes I think people just forget that we actually do offer a trading facility. And this, as I said,
I didn't actually know that.
Well, there we go. There you go.
You managed to keep it a bit quiet, that one. But I suppose that is good for as far as providing information, in the sense that you can see you have the hot, your own information in terms of what the punters are into.
Absolutely. We've got data coming out of our ears, and we've got very, very big plans to process that data, make it in a very digestible format for the private investor. This, again, is just a very small snapshot, a sentiment from how people have been trading via our trading facility over the past week.
And so in terms of new developments coming through, well, what should we look out for?
We're basically in a point at the moment, we're just trying to refine the site and make it very reliable and very fast. We did something yesterday which I imagine if people clicked in today, they would be quite amazed at the change of speed. The site is ever evolving. If we go back to the slide we had a moment ago with the Quick Picks overview, I've just asked a developer to put in a search engine there on the actual page where you can add a quick pick via that page as opposed to having to go to the share page. So again, trying to shortcut and make the private investor's life a little bit easier. We've got some far bigger things in the pipeline as well, but I'll keep some cards quite close to my chest.
Yes, exactly. Yes, save that for another time.
Just to rest assured, we're working day by day.
Right, just one final slide here to look at. Right, the trading page, which covers a lot of things here.
Again, it's just, as I said, that sort of almost advertisement, the fact that we actually do offer a trading facility. As I said, the site is ever evolving, so I took this screenshot about 2 days ago, but even now the page has changed slightly. Our trades are £9.95, and I believe we've now got a flash up on that gentleman's breast pocket to just mention the fact that that is our per trade cost there. Yep, you can look at normal share trading, as I've called it with us. You've got ISA functionality, and a lot of people, going back to the naked trader, I think one of his first delves into private investing was feeling he could do something a lot better with his pension. So his self-invested personal pension, he put some shares in it and went on from there, basically. So yeah, just to say that we do offer this functionality. So people like our site, they can also actually trade via us.
Okay, well, on that note, Scott Grant, Director at London South East, thank you very much for coming in today.
Thanks, Zach.
We'll be back after the break. I'm joined here by one of the most intelligent commentators in the City of London, at least according to my way of looking at things. Chris Bailey from Financial Orbit. How are you today, Chris?
Very well, thanks, Zach, and thanks for reading out my prepared words. That was
I'm still recovering from our little tussle that we had over the Remain leave thing, which I think
we were both incorrect on.
I felt that you won it by such a large distance. I'm still hurting, but
unfortunately we were both wrong on that issue, which was a shame. But the world moves on and opportunities move on apace.
Yes, exactly. Right. Onto the stock market. In fact, that was a pivotal point in the year, June the 24th, when the markets opened. Well, the FTSE opened down 300 points, 400 points, and then rallied it's rallied ever since from 5,700, I think, intraday. Did that surprise you?
The market reaction didn't surprise me, given the magnitude of the vote, which clearly was the surprise, the result. The market reaction did not surprise me, given how concerned everybody had got. But what really has excited me more are the opportunities that led to. Yes, I am slightly surprised the market is where it is today, but I'm not surprised by what we've seen directionally since the big fall-off for the couple of trading days after the Brexit vote was attained. So no, it's been an opportunistic period, but a volatile one as well.
Okay, great. Well, let's have a look at some of the companies which are part of the furniture as far as the stock market is concerned, or at least in focus. BHP Billiton, diversified miner, something with the diversification is actually not working in its favour at the moment, is it?
No, it's been, and actually when you take a look at this chart, this is the good part of the year. The last 3 months have been fantastic if you've been a Billiton shareholder. They reported earlier in the week, said some interesting stuff. Essentially, the world is workable. Their dividend was a little bit higher than the minimum they had indicated to the market earlier in the year. But actually, what I find really interesting about the stock is how it's responded to the post-Brexit world scenario. Because you've got two things going on. One is, a big diversified miner like this makes hardly any money in sterling and pretty much all of its money in dollars. So guess what? The dump of the pound over the last, post the Brexit vote, has meant that the profits of this company have been perceived much more favourably. And as a consequence, we've reattained the £10 level, which from a £6 level in late January, early February, didn't look obtainable. So this is kind of an interesting stock. I still think it's in recovery mode because I think it's reflecting the fact that the world economy is still, let's face it, in a low growth zone. But I'm heartened by the cost cuts, the dividend progression that they've indicated, or capability, and let's see where it goes. I think that the £10 level, which has been a big resistance, I think that will turn into the new support.
Excellent. Well, let's go on to the next contender, which is Admiral, which had a little bit of a blip this week.
Early this week, indeed, Zach. And I wanted to show this one because Admiral's been a hedge fund favourite for many a long month. The chart has looked absolutely fantastic. Actually, if you pull it out for the last 5 years, the thing's just been going up and up. But it had a whoopsie, as you said earlier in the week. And this one I'm looking at closely because ultimately Admiral's a smart business. Online, keeping the costs under control, expanding into Europe and the States with their low cost model. I think it has a lot of resonance with clients and customers potentially. Smart management team, which is also evolving a little bit. The founders stepped away. They've got a proper CEO in there now. I think it actually looks quite good.
So it's just cynic as most, so I can't resist this one. Smart, the company is smart, but the customer isn't that smart because customers just pay whatever they want, the company wants them to pay. They've got perfect pricing power on that, and they've just been able to do that year after year.
Well, I'm not sure about that, Zach, because ultimately, let's face it, the distribution of how you look at insurance now has completely changed. Because ultimately people are accessing insurance a lot often by the internet, they're looking at the comparison sites. And a company like Admiral realises that you've got to attack the customer at many different levels. Comparison sites, sometimes through TV advertising, sometimes through people picking up the phone. They've got the different brands which allow you to sort of access different customer bases. Their key is that they've kept their internal costs very low. By having very low internal costs, guess what that means? They can make money under different scenarios where maybe they mentioned that motor vehicle insurance rates were all over the place. But actually they're the ones as sort of effectively the lowest cost producer who can actually still write profitable business despite that difficult scenario. They had the profit whoopsie because they moved some reserves around. They actually paid an extra dividend, which has brought down some of their level of capital adequacy.
Right.
People looked at that sort of, in my opinion, in a slightly diffident manner. I think here, the £20 level, I do like my round numbers.
Yep.
I'm a fundamentalist ultimately, but round numbers mean something. The £20 level on the share, I think, is a fascinating one. If you see it trading there, that's a good pickup opportunity in my view.
Okay, let's move along to the next stock, Imperial Brands, which used to be Imperial Tobacco, but they've airbrushed away the sinful part of that name.
It's still predominantly, obviously, a tobacco company, but of course the brands reflects the fact that they're acquiring new brands in the States and other places like that. And as you say, it's from a presentational point of view, maybe it's helpful. The PR's working, though, in the sense that the share has been pretty rampant for the last few years. And again, it's been a beneficiary of good overseas earnings and people perceiving those quite well in an era of a lower pound. My trouble with Imperial Brands, though, is fundamental value. Let's face it, tobacco it's been a profitable investment for many people, but it's not a growth business, not an easy growth business. Much more regulation coming in. Of course, you've always got taxation issues. And yes, as a product which ultimately has, well, let's face it, people are addicted to it, ultimately. It does have pricing power, but I think this company, particularly above that £40 level, is looking expensive. People, I think, are factoring in a bid. If there is no bid for this company, then I think the shares, you should rotate into other areas of the market, be it some of the names already mentioned, the Billitons and Admirals of this world, or some of the other stocks coming up.
Let's move along to the next stock, which is Kingfisher DIY, something which I've never done in my life, but maybe one day.
That makes two of us, actually, Zach, but there you go. We can still comment on it and talk about it, though. Kingfisher had their numbers earlier on Thursday. The numbers were actually okay, and what they said was quite fascinating. They've got a couple of strong brands, B&Q and Screwfix here in the UK, but their French sales are just as big as their UK sales. And the most fascinating aspect of their numbers were the fact that the contrast between the UK, which was workable, yes, they gave the suitable nod towards Brexit. They said, look, there is some uncertainty out there, but it hasn't dramatically sort of hurt us in any way. By contrast, the French business, they were citing industrial action, bad weather, that old chestnut, and general patchy trading. So the contrast between good trading in the UK and bad trading in France is kind of interesting. And I think many UK companies with significant European exposure, they can periodically get beaten up because of that, worries about just where the Eurozone is going, levels of growth and ability to make money. I'm not a holder of Kingfisher currently. I'm waiting for the share to come back to that 330 level, which it's bounced off all that broad area a couple of times already this year. But it's one to watch, because I think actually the differentiation will be, if ever Europe gets its act together, Kingfisher shares are going to fly.
Okay, time's very tight, so we can just go through the last couple of stocks quickly.
Yeah, so you've got Rank Group here. Now, Rank Group shares, obviously they've been involved in this strange bid with 888 for William Hill, which has been turned down by the William Hill. And what you can see with Rank shares is that up until the last few days, they were under pressure because of that bid. And if I think the next chart could well be William Hill, if you take a quick look at that, you can see the contrast in the shape of the graphs. By contrast, William Hill shares have got bid up. I actually think they should have investigated the options around this bid, because the 888 Rank Consortium was offering allegedly much closer to £4 a share. I'm surprised William Hill have completely said no on no accounts are we interested. I think they should have just left a little door open to say, well, maybe we are interested. But as you can see, as always, deals have impacts on shares. I think if we take a look at the next chart, you can see another share that's been influenced by a deal, and that's Entertainment One. Obviously, Peppa Pig. I know you're a great fan, Zach, as we all are. And
I have every DVD.
Absolutely, me too. And Entertainment One shares have been a fantastic play over the last few months. They've gone up on bid rumours. ITV have made an offer. As you can see, there are continued rumours that private equity might potentially be interested as well. This is one to watch. They've been a rampant share, but content remains king in today's world. I would say still one to be musing about at the very least.
We will be back after the break. A bit of Brexit, my favourite topic.
Absolutely.
Go on to what effect it's had on the stock market, or a couple of stocks,
Yes.
which are leading blue chip stocks.
Yeah, absolutely. I thought it'd be interesting to know, well, Brexit occurred, or at least the vote occurred. So what on earth was I thinking when I saw share prices moving around in a dramatic fashion? What were the 3 shares that I immediately bought on the Friday or the Monday immediately after the Brexit vote? So I think if we take a look at the first graph, you can see Whitbread. Now, Whitbread, as you can see, had a dramatic fall. It fell below £35 a share after the Brexit vote, and you can understand why. What are the big Whitbread brands? Premier Inns and, of course, Costa Coffee. Clearly things which could be impacted by lower tourism flows, lower UK consumer spending and the like. However, what I see are actually 2 strong brands, even in a patchy economy. I doubt if we're going to stop drinking coffee. Premier Inns could actually gain some sort of hotel bed market share from some of the more established 4- or 5-star players. But I also see growth and expansion, not just in the UK still, but also overseas as well. Sensible Company, it's the only one of those sort of big hotel and related plays which haven't sort of unbundled their assets, sold their assets on to realise value like perhaps an Intercontinental Hotels has, or an Accor in France. And similarly, I look at Starbucks and the valuation placed on that pure coffee chain play, and I wonder about myself, at some time, surely they're going to do a spin-off of Costa Coffee. Either way, that's for the medium term. What I like shorter term was the opportunity post-Brexit. I felt that was overdone. I've been pleased to see the share bounce back since.
Right, and do you think the rebound is just with the market, or people who? I mean, is it company specific, or is it a general return?
So I think here we're accessing UK consumer plays, and clearly the fear post-Brexit was that the UK was going to move into a recession, consumer spending was going to be affected hugely, and the knock-on impact on this sort of company, this kind of consumer discretionary company, was going to be very clear. So I think you've got leverage kind of both ways. If that apocalyptic scenario doesn't happen, then you should see an extra special recovery in this share versus the broader market. Sure, the direction is not dissimilar to the FTSE 100, but I would argue the leverage so far has been more, and I would suggest that continues apace.
Okay, great. The next volatile Brexit play, Carnival.
So we've got Carnival here. Now, Carnival, again, people worrying about holidays and whether people are spending money or not. But intrinsically, I've never been on a cruise myself, but I observe what the broader populace is doing, and cruising is very sort of interesting to many people, demographically and geographically. What Carnival are doing...
We're too young.
I think we're too young. I like to think that, Zach, as well, but I fear that they're trying to broaden the demographics to everybody, essentially families.
Is it 50 plus, or is it 60 plus?
No, I've got a feeling, Zach, they could be trying to access a sort of a broader range of people here. But who knows? Let's face it, in an ageing population world, that is still a very good aspect to it. But ultimately, Carnival are doing very interesting things around the world. Again, you saw a big sell-off in the shares post the Brexit announcement on fears of how it might impact tourism flows and related. I think some of that has been massively overdone. The shares have bounced back since. I think they've got further to go because they're only just now tapping the nascent Chinese market. It's going to be very interesting. They've got a ship in there now. They've done some big capex there. think that's going to be a very big profit centre for them over the next couple of years.
We'll be back after the break.
Everyone talks about FTSE 100, which of course is fascinating, but let's face it, the 250 in a post-Brexit world has suddenly come to the fore. People are looking at it as domestic play. Not quite right, I don't think, because it's composed of companies of all sorts of ilk and nature, but nevertheless, a greater focus in a post-Brexit world, and quite rightly so, given sort of the backdrop and the sort of the earnings profiles of some of the companies there.
Right, and this has been the difficult one, really. I mean, the FTSE just went straight up, but here with the FTSE 250, you were sort of wondering whether there was going to be a divergence between the two.
That's right, because if you think about the FTSE 100, you've got all those massive dollar earners, miners, pharmaceutical companies, even things like Vodafone barely earn any money in the UK, but they earn it elsewhere in the world. So lots of FX-induced benefits there. By contrast, the 250, that a little bit more UK-centred, and sometimes sort of a broader range of businesses. And because they're a little bit smaller too, people worry a bit more. Maybe there's a bit less liquidity, maybe there's a bit more fear about are they going to get beaten up in a slightly more difficult world. So undoubtedly a more volatile index, but given the way it dropped off post the Brexit vote announcement, opportunities arise.
But did you think, I mean, being honest, do you think that it was, as soon as you saw it collapse, did you think, oh, well, that's a great opportunity, or did you stand back?
My thoughts are always, whenever you get slightly less liquid shares, that maybe you get the second stage of the opportunity there. The first thing I think you always must buy when markets fall off sharply are highly liquid, but what you now perceive as undervalued shares, blue chips if you like. The second stage is when people look slightly more broadly, look at sort of slightly smaller companies which haven't yet rebounded back, but inherently have some interesting business profiles, and that may lead to sort of a second leg of opportunities. And certainly what I looked to do was find a few of those in the sort of the weeks after the Brexit vote, when kind of the dust has sort of settled. It didn't look as if apocalypse was just around the corner, and I kind of thought maybe some of the mid-cap plays may be of particular interest.
See if we can look at the chart of the FTSE 250 just to check what happened. A bit of a roller coaster ride there from the end of June going into early July, but right back and higher than we were before.
That's it, and I think that reflects not just the fact that this sort of terrible sort of perspective on where the UK economy was going has kind of morphed away, but the second aspect is when you look at the composition of the 250, actually there are some sensible companies there doing sensible things, and consequently, guess what? The index has bounced back.
Okay, a couple of stocks in there that are worth looking at the moment?
Yeah, so I think the first one we've got here is Thomas Cook, and Thomas Cook's a fascinating company because it's been wholly beaten up. There's lots of controversy about its past, be it CEOs or decisions by the company themselves. But what's really interesting about it is that it's very cheap, it's got a long history, and they know how to manage the industry cycle. Yes, a few years ago they did flirt very aggressively with negative sort of side on their balance sheet, but they've learned from that. New management teams have made different, better decisions. Now, what I'm perceiving here is that the shares, again, have fallen off very aggressively because of geopolitical fears about tourism, and obviously some terrible events in certain individual countries. But as I say, travel companies know how to adapt. I was heartened by the recent numbers from their peer TUI Travel. I think that is sort of a good indication for Thomas Cook. And what I'm seeing is slowly Thomas Cook putting together deals and sort of gaining credibility in the marketplace to allow their shares to once again get much closer to that £1 level. Currently trading in the lower 60p's level. You know, that's therefore offering for me very attractive upside opportunity.
Yes, I like the chart. There's a triangle breakout on that. Through.
I'll leave you.
Yes, exactly. Yes, but no, it is interesting that they picked it out as coinciding with, let's say, the improved technical position as well.
Yes.
It's always good when that happens.
Absolutely.
And finally, Ashtead.
Ashtead's interesting company, a company again which a few years back flirted with financial disaster. But again, management have learned, or newer management have learned, how to manage their business. Obviously, Ashtead is involved in the rental of construction and related equipment, you know, associated with the industrial cycle and the house building cycle. Now, we would know Ashtead here for their A-plant business in the UK, but a much bigger business is their Sunplant business in the States. Now, of course, with the movement of the dollar and the currencies, suddenly these dollar earnings have come to the fore again. And again, Ashtead, I felt, it has sold off aggressively because people were worrying about the industrial cycle and related. But the reality is these dollar earnings, and actually a very savvy management team who've invested well and outperformed their peers, taken market share consistently around the place, and have missed some of the problems that, let's say, a Speedy Hire has had in the UK, or other companies of that ilk. Actually, a lot of credibility, and I think a building underlying valuation scope. So what I'm seeing here is what previously was quite a lowly valued share now becoming more a sensibly valued share, but that still leaves a little bit of upside opportunity. Being a good performer, a bit more to go.
Chris Bailey from Financial Orbit, thank you very much for all your insight today. Well, that's the end of the share views. We'll see you again next week.